Hello, this is Leroy Meadows and welcome to this session. And in this session, we're going to illustrate the same exercise we did for a weighted average and first in, first out, but now we're going to use standard costing method in dealing with spoilage in a process costing system. So let's go ahead and build on our question here. This is exercise 18-31 at the end of your chapter. So let's go ahead and get started. Logico is a fast-growing manufacturer of computer chips. Direct materials are added at the start of the production process. Conversion costs are added evenly during the process. Some units of this product are spoiled as a result of defects not detectable before inspection of finished goods. Spoiled units are disposed of at zero net disposal value. Logico uses the weighted average method of process costing, and as we see down here, we're going to refer to that and then use standard costing method. So, under standard costing, let's take a look at our information and let's review this information that we did in the previous two exercises. Our beginning inventory, we had 900 units in beginning inventory. Of that beginning inventory, 125,766 of that was related to direct materials, and conversion costs was 10,368, and those were costs, remember, from the previous period that are now carried over in this period. Degree of completion, beginning work in process inventory, 100% complete with regards to direct materials, 30% complete with regards to conversion costs. Now the unit started during September, 2,754. Goods units completed and transferred out during September, 2,500. And our ending work in process inventory is 490. So out of those 490 units, they are 100% complete with regards to direct materials and 10% complete with respect to conversion costs. Total costs added during September, $619,650 for direct materials, and conversion costs equal $253,098. Normal spoilage is a percentage of good units, 15%. Degree of completion for normal and abnormal spoilage, 100% for direct materials and 100% for conversion costs. So let's go ahead and let's get started here in making our computations. Now, remember that on using standard costing, we're also infusing that with first in, first out costing. So we're just, instead of computing a cost per equivalent unit, we're given a standard cost per equivalent unit. So let's go ahead here and compute step 1 and step 2 using first in, first out. Units in beginning inventory, the problem told us we had 900. Then we also added what? We added 2,754 units started during September. So that gives us a total of 3,654 units that we have to account for. Now our beginning inventory, we had what? Well, we need to figure out first how much was transferred out. How much was transferred out? 2,500. So out of beginning inventory, we transferred out, 2,500 minus our beginning 900 units and ending inventory, our beginning inventory. So I transferred out 1,600 units that were started and completed this period. So the 900 from beginning inventory plus the 1,600 units that I started and completed give me my 2,500. My ending work in process is 490. And the difference between my transferred out units and my work and ending process units, and that gives us what? What is it? 900 plus 1,600 plus 490 gives me 2,990. Difference between this number here and my units to account for will give me the number of units spoiled. And when I do that, I find that I have 664 units that are spoiled. Now we know that, and that's my total spoilage. So out of that 664 total spoiled units, some of them are going to be normal spoilage and some of them are going to be abnormal spoilage. How much is my abnormal spoilage? Well, I'm going to compute, and it tells me the spoilage rate here is 15%. So if I look down here and it tells me my cost is 15% of good units transferred out, So 1600 times 0.15 gives me 240 spoiled units. Give me just a moment here. 2,500 units times 0.15. Sorry about that. And I have 375 units of normal spoilage. And then the remainder of that 664, 289 units are going to be abnormal spoilage. And then when I add all these up, my units accounted for equals my total units to account for, so I am good. So now step 2 in the production report process. I need to compute my equivalent units. So I'm going to compute that, and how much my beginning inventory already was complete with 100% of direct materials. We're talking about this right up here. So did we have to add any more direct materials? No, because they were already completely added the last period. However, we did have to add some conversion cost to beginning inventory. Now, in the previous month, we had completed 30% of the conversion process. So how much of the conversion process remained this period in order to make those units complete? 70%. Now, let's take a look at our equivalent units for started and completed. Now, if we started them and completed them, that means we added all the direct materials and conversion costs for each of those units. And then with normal spoilage and abnormal spoilage, we're told they're 100% complete with regards to direct materials and conversion costs. So I'm going to go ahead and plug those numbers in here. And then my work in process ending for my equivalent units, what degree of completion was I for direct materials? Well, I was, it tells me here in the problem, 100% complete. Degree of completion of ending work in process inventory, 100%. So I've got all my units from there. But I'm only 10% complete with regards to conversion costs. So I'm going to take my total work in process ending work in process inventory units and multiply that by the degree of completion. And I get 49. So now I'm going to add up all my numbers and get my equivalent units of work done this period. And again, we only want the work done this period. We don't want to include work that was done previously. Why? Because this is using a variation of first in, first out, and we're going to use standard costing. So standard costing begins and separates everything by when in the first in, first out. The only change is our cost per equivalent unit. We're given that amount. We don't have to compute that. So let's take a look at our beginning inventory. What was the amount of beginning inventory? Well, we're going to need to figure out then our standard cost per equivalent unit. First of all, we need to know what it was last period, what it is this period. If it changed, then we have to go by the beginning inventory, what it was last period. If that standard cost did not change, then we just take our standard cost per equivalent unit and multiply that by the number of equivalent units of work done in this period. So my equivalent cost per equivalent unit in the problem here, $215 for direct materials and $92 per equivalent unit for conversion costs. So $215 and $92. Now to value my work in process beginning inventory, the stuff that carried over, I'm going to do what? I'm going to take my cost per equivalent unit and bring that what? Times 900 units. Now I get 915,000 or 193,500, excuse me. Now, let's take a look here and figure out what is our work in process beginning inventory for conversion costs. Well, our beginning conversion cost should be what? How am I going to compute conversion cost? Because we did 70% here, so how much did we do last period? 30%. So I'm going to take 900 times the 0.30 that we did last period times my standard cost per equivalent unit, and that should give me 24,840. So the total value of my beginning inventory is 218,340. Okay, let me see here. And yes, that's correct. Okay, just double checking my work. So now we need to add in the cost at standard cost per equivalent unit. So I'm going to take, for this period here, I'm going to take my cost per equivalent unit, my standard cost, 215, and multiply that by the equivalent units of work done this period total, which was for direct materials, 2,754 units. And then when I do that for standard or for conversion costs, I will get 270,756. So the cost to account for 1,081,206. That's total production cost. 218,340 from beginning inventory, plus additional costs added in this period of 862,866. And again, we're using it standard costs. We're not taking or just assuming the numbers over here are correct. So, and how much in total conversion cost do I have to account for? 295,596. And for direct materials, 785,610. Now let's compute and complete the assignment of costs at standard rates. Now, we already know that we're using standard costs. My amount of work in beginning inventory, there we go. And now, costs added to beginning work in process inventory. This was the balance before. Now any additional costs we added in here. And did we add in any additional costs to that? Well, we didn't add any more additional costs. Why? Because our direct materials were already added at the beginning of last period. So, oops. However, we did have to add more conversion costs to our beginning inventory. And how much did we have to add? We had to add 630 equivalent units times the standard cost per equivalent unit. So that's going to be a dollar amount of $57,960. And that's going to give me a total of $218,340. For my beginning inventory, it was already there. How much did I add during this period? 57,960. So my total from beginning inventory before normal spoilage, $276,300 worth of costs associated with our beginning inventory. And again, that's before normal spoilage. And this is before the unit started and completed this period. Okay, now let's value our cost before adding normal spoilage. For direct materials, how much did we add this period to the units started and completed? We added in what? Standard cost per equivalent unit times the amount of equivalent units started and completed this period, 1,600. And that gives me $344,000 worth of direct materials. For conversion costs, what did I have here? How much in cost did I add to my units started and completed? 1,600 equivalent units for units started and completed this period for conversion costs times the standard cost per equivalent unit of $92 for conversion costs. And that gives me $147,200. So total amount at standard costs I have For the units started and completed, $491,200. Now, let's take a look at our normal spoilage, because we want to compute that separately, but then add that cost in to the cost of good units completed and transferred out. So how am I going to do my normal spoilage? I'm going to take my standard cost per equivalent unit for direct materials times my normal spoilage equivalent unit for direct materials, and that gives me $80,625. If I do my conversion costs, I'm going to do $92 here per standard cost per equivalent unit times the 375 spoilage units that are fully completed for conversion costs. And I want to get $34,500. So what is the value of my total spoilage? The value of my total normal spoilage is $115,125. And remember, we roll that number into the cost to the total cost from beginning inventory and the cost of any work added to the beginning inventory plus the work added to the units started and completed. So when I do that, I'm going to get how much? Well, the total cost of goods completed and transferred out, 600. Nope. We have to add in beginning inventory. There's where I missed it. Okay. Beginning inventory plus cost for units started and completed before normal spoilage, and then plus normal spoilage. And the total cost of good units completed and transferred out, $882,625. Now, what is the value of my abnormal spoilage? Well, I'm simply going to take my standard cost per equivalent unit and multiply that by the equivalent units for abnormal spoilage. For each cost category of direct materials and conversion costs. And when I do that, I'm going to get total abnormal spoilage of $88,723. Now I'm going to need to compute my ending work in process inventory. And again, how did I do that? Take my standard cost per equivalent unit for direct materials times the equivalent units for direct materials and ending inventory. And then I'll do the same thing for conversion costs. And I have ending work in process inventory of $109,858. So altogether, I had to account for $1,081,206 worth of total production costs. Did I account for every penny of that? Yes, I did right here. So I know my numbers are good. My numbers check out. We are good to go on that. So, and then we're asked in part 2, what issues should the manager focus on when reviewing the equivalent units calculation? So what should we So let's take a look here and let's see. Well, what issues could arise? Well, if someone's bonus is tied to operating income, or let's say that we know this was an exceptional period, we can't duplicate it. So what a manager might do is a manager might change the estimated degree of completion to best fit what is in their best interest. Maybe we had extraordinary months and we did a lot of business. Well, what the manager might do is lower that amount down, lower the degree of completion down, so that it'll look better next month if he or she anticipates a rougher month next month. We might even overestimate as a manager. And I say we shouldn't, but managers may overestimate. Why? Because then that accounts for more costs. and so forth, and so their bonuses might be dependent on that. So there may be a number of different reasons why a manager would want to change and shift the estimated degree of completion. So, because managers sometimes can use the smoothing effect, where if we had a super good month now, lower our our estimated degree of completion, and then carry that over so that more work, so it looks better next month, or vice versa. Or they might want to pull some of that forward. So there are some issues with management. So you want to make sure that when managers are assigning these costs and estimating the degree of completion, you want to make sure you follow up, and supervisors should and people should be asked specific questions about the process they follow to prepare the estimates. And really, we should be emphasizing obtaining the correct answer, regardless of how it affects reported performance. Because when we do that, then we are promoting ethical behavior and ethical actions throughout the organization. Thank you for joining me. This is Leroy Meadows. Have a good day.